Awesome. Thank you very much.
Thanks. I'll be making the typical forward-looking statements throughout the course of my presentation. Just want to thank you for being here. Thank your Gold Forum for hosting. Thank you. Better? Equinox Gold, as mentioned, is an Americas-focused gold producer. We're a young company. I've been with the company since 2016. The company really got its impetus when Ross Beatty, who's a prolific mining entrepreneur, joined as chairman in late 2017. At the time, we were a single asset developer. We had the mine, Aurizona mine in northeast Brazil, and we announced development on his joining with the company. In late 2018, we acquired the Mesquite mine from New Gold. That was our first production. And then we've been very active on the corporate front through 2021. We got the Aurizona mine up and running in 2019. We acquired or merged with Leagold in 2020. That brought in the Los Feliz mine in Mexico and 3 mines in Brazil to complement the Aurizona mine that we already had in Brazil. 2021, we acquired Premier Gold. That brought in the Greenstone mine. We'll be talking a lot about the Greenstone mine throughout the course of this presentation. That's our big catalyst for the year and will be a cornerstone asset moving forward. And in the meantime, since the acquisition of that mine, or that company in that mine, we've been mostly heads down for the last 2.5 years building that mine. We have also, over the course, spun out some properties, and created a royalty company, typical non-core asset activity, which has actually delivered a lot of value to the company. And that brings us to 2024. So we've gone from being a single asset developer in late 2017 to having 7 operating mines, the mine in commissioning in Canada, and 3 expansion projects from those existing assets. We have close to peer-leading mineral reserves and resources. We'll do 700,000 ounces of production this year, and we have a solid organic growth pipeline to achieve 1 million ounces of production in the future. One final comment about being an Americas-focused producer. When Ross joined the company, a lot of the team had experience in Africa with African-based projects, east and west, and very comfortable in that jurisdiction. When he joined, he said, I think the world's going to change in the coming years. We're going to stay focused on the Americas. I think that was a prescient call in retrospect, especially in light of what's happened in the last couple of years with nearshoring and reorganizing of global supply chain. Our 2024 guidance, so as we move forward, and I think you'll see this more from the company, we're focusing on 4 production centers for the company as we move forward. I'll start over on the far left, and then we're going to come back to it. A Greenstone mine should be coming online in the second half of this year. As a CFO, near the end of a large build as a mid-tier gold producer can't happen soon enough. We'll come back around to that. We've got the Los Feliz mine in Mexico, which currently represents about 25% of our overall production. That should do about 165,000 ounces this year. Aurizona in Brazil, which should do about 100. These are all midpoint of guidance range figures, about 115,000 ounces this year. And then what we're now referring to is the Bahia complex, which is the combination of the Santa Luz mine and the Fazenda mine. Those 2 mines, as the crow flies, sit about 60 kilometers apart. We have rights to all of the land that sits between them, and there's 2 different styles of gold processing plants there. The Santa Luz mine is a resin and leach plant, which can handle higher carbonaceous material that exists in the region, and the Fazenda mine is a traditional gold carbon and leach processing plant. So as we develop that land package moving forward, we'll have opportunity to, depending on the ore type, shift from one mine to the other, which is why we're now combining that into one complex, and of course we'll realize management synergies from doing that. And then the remainder of our mines, smaller, Mesquite, RDM, Mesquite and Castle Mountain. Castle Mountain will come to in a minute. That's one of our large growth projects, which is in permitting. And the Mesquite mine, which is one of our former COOs referred to one of the grand dames of mining. It's been continuous operation for about 30 years. Both of those mines are US-based in California, and with about 80,000 ounces planned at Mesquite for the year. So our catalyst for this year is the Greenstone mine. It will be a cornerstone asset for the company. We own 60% of the asset. Orion Mine Finance owns the other 40%. Has an initial 14-year mine life, about 1.3 grams per ton life of mine. We'll come to that in a minute. It'll be open pit mining method to start. A strong mineral reserve and upside that we'll discuss in a minute with respect to mineral resources. A couple interesting things about the Greenstone mine. It's a rare asset in that it's going to be a very high volume, as you just saw, producer annually. Typically, these mines are owned by majors or very large private groups. So it's one of the very few, as we move forward, high output gold production mines that's going to be owned by a mid-tier gold producer. So why are we so excited about Greenstone? Well, you can see on the left side here, it's the annual ounces of gold production. On the right side, it's grade. And these are open pit mines in Canada. So Greenstone is the one in gold. The dots themselves represent grade. So you can see for large open pit mines at scale that do, call it 350,000 ounces plus per year, Greenstone is amongst the highest grade in Canada. And what does that grade translate into? Lower costs, of course. It's kind of a busy chart with the colors. Focuses on the top line. But you can see that we expect Greenstone to be producing at sub $1,000 an ounce, which would put it in the lower quartile of gold producing assets in the world. With respect to our progress at the mine, I'll just run through the major elements. Well, we just announced the other day, or yesterday I guess it was, that we started hot commissioning, an important milestone in the construction process. Our goal is from the outset, the goal has been to pour gold prior to the end of June of this year. We're very much on track for that. We're just elated, actually, about the progress of this mine. It's been largely on budget and very much on schedule since the beginning. So yeah, I'll just run through a few. When it comes to the major elements of the mine, power plant has been commissioned and turned over to operations since late Q3 last year. Water management tailing facility has been complete since December and permitted, and just waiting for the plant to get up and running. On the mining front, it's ramped up and right on schedule. We're doing about 90,000 tons a day. One of our concerns, call it heading into mid last year, was with recruitment. A lot of demand for talented maintenance personnel. That really unclenched in Q3, and our recruitment program, both with respect to the mining team and the overall team, is right on track for where we want it. And with respect to mining, we have about 1.5 million tons of ore stockpiled in front of the plant right now, which is more than enough to commission. So we're obviously very pleased about that. With respect to permits, we have all the permits we need to continue with hot commissioning. We're on a temporary permit currently, and expect the permanent permit in the coming weeks. We'll talk about the plants a little bit. So the front end of the plant, the crusher has been commissioned for a while. The plant was largely construction complete around the end of 2023. The focus has been on programming That's integrating instruments, equipment in with the control room. That programming is complete, which has allowed us to proceed with hot commissioning. And what we expect is ramp up through Q3, achieving commercial production around the end of Q3. We're defining that as about 80% of design capacity, and then proceeding through full ramp up to full operating capacity through the end of the year and early into the new year. By the end of the year, we hope to be at about 95+% of design capacity running through the plant. So not only is it already going to be a large-scale producer, what you see on the right in the kind of gray oval is the existing pit. And to the east, which is the right side, and to the west, you have resource that sits, call it just outside of that pit. We've been very heads down, as I mentioned earlier, focused on construction and making sure that we're delivering on construction. And so with respect to pit expansion opportunity is something we're going to start addressing once we get the mine up and running. So I think you'll see us moving on that into next year. And then likewise, there's underground potential, as you can see down and to the left on here, higher grade, deeper. Again, that's at a resource level, indicated and inferred. Also something that we will continue to work on and upgrade heading into next year and moving forward to bring that eventually into the life of mine. One of the things with respect to the plant I should highlight, we plan on doing 27,000 tons a day. The expectation is we could increase that to 30,000 tons a day without having to change any of the infrastructure. So that's near mine. So we just finished discussing near mine opportunity and upside. This is the district. The Greenstone mine is in a historic greenstone mining district. Each of the, call it X's, represents a previously operating mine. Greenstone is the green blob that you can see in the lower right. So opportunities there also within the district to add to mine life. And again, something that we look forward to being able to do post ramp up. So Greenstone will be the big catalyst for the year. We expect to contribute, call it 115,000 ounces, mostly in the second half of this year. We have, and that's at 100%. Oh, sorry, that's our portion. We have 3 other projects within our existing pipeline that we anticipate to build out in the coming years. The nearest term one is the Arizona mine, which is one that I mentioned at the beginning, and was that single asset that we had at the beginning of the company. It's currently an open pit mine. The deposit runs at depth underneath that open pit, and so the plan in Q4 for this year is to put in a portal, start the underground development, which we plan on doing organically over time. It's higher grade, and so you'll get an increase in annual production, call it on average about 110, 120,000 ounces a year, up to 140, 150,000 ounces a year through the addition of underground feed. So you'll see more on that as we move forward into 2025. The Castle Mountain mine, which I touched on and will now discuss a little bit more, it's just on the California side of the Nevada border in the U.S. It's effectively a pilot mine right now, very small production, about 25,000 ounces a year. It's in permitting to expand it to 220,000 ounces a year for the first few years of that mine life. Also will dramatically decrease costs at that mine. There's a feasibility, it's pre-inflation, that had about a $900 all-in sustaining cost. It will need to be updated in due time. The permitting itself at the county and state level has gone very efficiently. At the federal level, it's gone a little slower, but we do have good traction. Recently, we believe that permit will be in hand in about mid-2026, and then we would be in a position, we believe, to make a construction decision after that. In the meantime, with respect to Castle Mountain, we're focused on continuing to advance engineering and understanding of the deposit, much like the Greenstone team that we inherited by the acquisition of Premier did, which really set the stage for the success of the build of Greenstone. So we've learned a lot from that and want to carry forward that pre-construction study work to make sure that construction will go smoothly. In addition, we have the Los Filos mine. It's a complex of 3 mines and underground, open pit mines and undergrounds. It's all recovered through heap leach. The future of that mine lies in building a gold processing plant, and doing so will, and that's mostly because of the changing characteristics of the ore body. As you move deeper through the ore body, metallurgy changes and reduces recovery from a heap leach perspective. From a gold processing plant perspective, it will chew through that without issue. But building the plant will increase output and also decrease costs significantly. So what does that mean for the company relative to its peers? The middle chart, you can see that, as I mentioned earlier, we rank right amongst the top of our peers with respect to mineral endowment and reserves. With respect to catalysts moving forward and expected growth, we have the Greenstone mine coming online, and then we just reviewed, we have 2 or 3 other internal development projects that we can build out to continue to expand production, to work our way towards that. Don't want to call it magical, but a number that represents scale, 1 million ounces of production per year. And on the left, interestingly, if we rank, and you would have just heard it from Perseus as well, we rank kind of amongst the middle of our peer group at 0.88. If you'd have taken this chart back 2 months, we would have been more at 0.64. I will note that something that Equinox, Torex, IAMGOLD, B2, Eldorado all have in common, and who are all ranked lower than average, I guess, compared to peers, they'll either have announced or are currently building or are just completing large-scale mine construction. So as we complete Greenstone, and I think we've already started to see that in the last couple of months where the PNAV was about 0.64, it's gone to 0.88. What we anticipate is to continue to move up through that valuation curve and be rated more amongst our higher rated and more mature peers. With respect to balance sheet, we're positioned to complete construction of Greenstone with cash on hand and an available credit. Our focus right now, get Greenstone up and running, and frankly, is deleverage. We're at that point. Our CEO would say we're at that point in what we would describe as the Lassonde curve, or mid-tier gold producer, building a very large mine, and looking forward to reaping the rewards of building that mine and generating lots of cash flow and deleveraging. With respect to our responsible mining, again, we're a young company. The last couple of years, we've published a number of reports, adopted international standards, and are adhering to them. I would direct you towards our website, but we've done our reports on water management, tailings management, greenhouse gas emissions. We have an excellent safety record, and with respect to ratings by external agencies, have seen significant improvement, and we hope to continue to do so, of course, in those ratings. Ross Beatty is our single largest shareholder, as I mentioned. He holds about just over 8% of the company. Why is that important? It aligns our decision-making with shareholders. The senior management team, their holdings of Equinox represent a large part of their personal net worth, me included, and those shares are all bought at market. So it really does align both our chairman and the senior management team with shareholders when it comes to decision-making about how to deliver value. So to sum up, it's a transformative year for Equinox. We're bringing Greenstone online. We've got lots of production, which gives us great exposure to this wonderful run in gold price. We're going to see increased cash flow and lower operating costs as we move forward. and look forward to delivering shareholder value, both with bringing Greenstone online and as we work our way forward to build out our expansion pipeline. Thank you.
Okay, thank you very much. Final presentation of this morning. First, Majestic, which is a